Good morning, everybody. Welcome to Monday. Hope everybody had an amazing weekend. We got Chart Maverick in here. I like that name. If we get a Chart Goose in here, we have the Top Gun team. Good morning, Nanda. Good to see you. Good morning, Chariot. Great to have you. Guys, I hope everybody's doing well today. Hope you guys are feeling good, ready to watch the market, learn some patterns, follow some rules, do some stuff and things. Today is Monday, October 6th, and according to news, there's not a whole lot going on, guys. Government shutdown, everything's tentative, really. Everyone's like, oh no, are they going to do something? Who knows? I don't know. It's the government. What I do know is that there's patterns. Good afternoon, Miss Jen. Nice to see you. We're going to focus on patterns today, guys. We're going to do everything that we need to do in order to get to where we want to be. And I want to share something, guys, and I think I may start my day with this every classroom. And this is John Novak's message from 2008, guys. And I'll paraphrase. I'll drop it in the room if you want to go back and read it in its entirety. But guys, the idea is that when you get the software, you're also given a plan. And when you're given a plan, it's going to be your job to study that plan, to practice that plan. It's like buying a hammer. You can't expect to be a carpenter just because of the purchase, guys. You got to put the work in. And that's what we're going to do today, is we're going to talk about how to do the work, how to get to where you want to be, and how to be successful with the software. And we're really going to do it with the fewest moving parts, if you will. Trading can be overwhelming for new people. It can be stressful. It can be exhausting. It can be frustrating. And it can be the greatest thing that you ever do. And really, there's a way to make it the last thing. There's a way to make it fun. There's a way to make it exciting. There's a way to make it not frustrating at all, guys. And it begins with learning to read your charts. And that's where I come in. I'm going to teach you to read your charts. I'm going to teach you to look at your indicators. I'm going to teach you to recognize advantages so that you can make good decisions about whether or not you would like to enter a trade based on the advantages that your chart reading provide. You will find that about 90% of your day is reading charts. Turn my heater down here. There is, excuse me, a lot of idle time as a day trader. There's a lot of sitting still. There's a lot of really not being in the market, but rather just watching the market, waiting for an advantage. And that's what the plans that I give you revolve around. Waiting for a pattern that you can prove wins more than it loses. That's it. It's having an edge. So we're going to talk about that. 3 trading rules. High probability trend trades. That is your Ninja Trader language. We'll also talk about trading view, letting you recognize when it's time to look for a trade, and then understanding how to enter based on those advantages, guys. And once you get good at this, true story, once you get good at understanding the very core, the very basics, you're going to understand things like where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. And then you'll be posting in my room beautiful trades like this that go with all of the momentum, that have nothing in the way, finding a way to get paid, waiting for areas to break, finding a way to get paid again. Nice trade, Pete. And that's kind of going to be our focus, guys, is getting you in tune with your charts so that you can do great things. The Ninja Trader, we do it with 3 rules that piece together what we call the highest probability trend trade. And it's just 3 rules. And these 3 rules, when true, create 3 advantages. And I want you to believe that the recipe for a trade, the reason to enter the market, is because you have momentum from rule number 1, because there is nothing in the way, you have a clear path from rule number 2, and because you can define an entry area, that point where the market is most likely to continue. These 3 rules come to be on only 2 charts. Again, the fewest moving parts to find success with the software. You will have a large chart and a small chart. Your large chart is going to lead the way. The large chart is going to tell you that it's time to look for an entry. It's a very slow moving chart. It's a very broad stroke of a brush, guys. And it really shows the overall opinion of the market. It lets you know what the people in charge want to have happen. And it takes one bar. The very first bar, the most current printing bar, is going to be the bar that you can use to define direction, momentum, and areas. Your first 2 rules are met on this one bar. When they are true, and I think that's a very important phrase, when the rules are true on the large chart, when you do have momentum, when your path is clear, then you'll go to the small chart. And in the small chart, starting at the bottom of this bar, the most current bar, that's typically where we see a retracement. And a retracement is defined as a small move counter to the underlying trend. So this will be a small move the opposite direction of whatever your large chart is telling you. You're going to pinpoint where that small move is most likely to fail, and then you'll see continuation, hopefully, in the direction of the large chart. And all of this, from pullback to entry to continuation, happens inside of that one bar. So this is nothing more than a refinement chart, an entry chart, and it'll allow you to reduce risk and to maximize profit potential. And we're using the 2 charts just as a reminder, guys. The large crowd wins. The people in charge, they make things happen. When they say up, it's easiest to go up with them. When they say up with momentum, they're going to be hard to stop. And when they say up with momentum and nothing in the way, you should be eager to join them in their quest for higher numbers. The small chart, guys, it's just the small crowd. They create that little move counter. These are your fighters. We love the small crowd. We don't want them to ever go away because they push us right back to our perfect entries. So let's talk about what you're going to see on your charts. Again, I'm talking about NinjaTrader. If you're a TradingView user, guys, we'll be there in about 20 minutes. But I find that when I separate them, it's easier to learn. So large and small charts will have areas in NinjaTrader. Areas are horizontal lines that run the length of the chart. That's all it is. A horizontal line on the large chart is an area. It can be a divergence high, which is a magenta line. You'll see a negative number that's a byproduct of the calculation to produce it. But this magenta line lets you know that there is a loss of momentum right at that pivot. So anytime you hear divergence, I want your brain to say, oh, loss of momentum. They're losing momentum. If you see it from a low pivot, it'll be cyan. For those of us born in the 70s, guys, it's hot pink and baby blue, really. You're going to see Fibonacci resistance, the red lines, when the market is trending up. This is a point where the market may stop, it could bounce, it may even reverse completely. You'll see it as Fibonacci support. If the market is trending down, that blue line is just a point where the market could stop or bounce. That's it, and you'll see it long before you get to it. You'll also see yellow 1-to-1s. Yellow 1-to-1s are fibs that print in the moment, and if the market is trending up, then it can behave as resistance. If the market is trending down, it can behave as support, guys. You're going to see areas on both time frames, large and small. You're also going to see triggers on both time frames, large and small. And there are large and small triggers. The small triggers are 2 solid lines. The large triggers are 2 dashed lines. They are moving averages. That's all they are, guys. When the background is green, means the trend is up, and your triggers are up. They'll be green as well. A lot of color coding. If the background is red, the trend is down. If the triggers are red, they're going down as well. You're going to use triggers to define momentum for rule number 1. You will use triggers to define termination conditions in rule number 2. And you will also use the large triggers to define your amazing entries for rule number 3. So triggers show up in everything that you do. All you need to know is that these are small and these are large. So now we're going to break them down, guys. One at a time. We're going to start with rule number 1, which says that your large chart needs strong trigger lines. This is going to provide us the advantage of momentum. Um, and it's a very easy look, guys. When the background is green and that trend is up, both large and small triggers must both be green as well. If you see a green background and a red trigger, or a red background and a green trigger, rule number one isn't met yet. Guys, give me a Y if you can hear me okay, or am I cutting in and out for everybody? Help me out with this real quick. Alex, we're good. Shane, we're good. Pete, I think you need to feed the gerbils. Give the hamsters an extra treat. Get them spinning that wheel just a little bit faster. In a downtrend, guys, smalls and large must both be red. And strong trigger lines is really one look. It is separation between the small and large. Everything is going up, and that space that's created when the small break above the large, when the large are wide, when everything is going north, that is strong triggers to the upside. In a downtrend, the small triggers will be below the large triggers. Again, the large triggers will be wide, angled down, and it's the space created, it's that gap between the small and large that lets me know that the odds are favorable for the market to continue in the direction of the trend, whether it is up or down. Odds favorable momentum pushes the market, guys. Odds favorable momentum is what we look for to break key areas. Odds favorable momentum is rule number one for a reason, because on a large chart, it's just difficult to stop. It rarely turns on a dime. Takes a little time to slow down. And then when the small triggers close the gap, when there's no longer space between the large and small, that's what we call weak triggers, and that's the opposite of strong triggers. This is where anything could happen up or down. So when you have strong triggers, it's going to look just like this historically. You're going to see the colors match, the space is there, the colors match, the space is there. And guys, this is where you're going to find the easiest trend trade short. That right there, that tail, is a pullback to an area inside of triggers on a smaller, faster chart. This is where you'll find the easiest trend trades long. Once again, that tail is nothing more than that small crowd fight. You guys are going to pinpoint where these tails are coming from. Strong triggers, and then of course the opposite of strong is weak. When the smalls work their way inside of the large, guys. And I want you to notice, and this was from the NASDAQ, I don't know, maybe a few months ago, weakness, and there was a reversal. This doesn't even have areas on the chart. Weakness, there was a reversal, 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 and that one time when it didn't with weakness, I bet you we had a big blue line there. Is everybody good? It's either momentum as a brand new user, or it's weakness. And it can be that simple, guys. And if you learn to recognize momentum, you are halfway through the core of what you need to recognize the advantages to look for an entry. And once you have that momentum, you've got to make sure that there's nothing in the way. We call these termination conditions. These are areas that have the potential to stop the market, guys. You're going to see it again on the large chart. And when none are present, you will have a clear path. And it's just the horizontal lines on the large chart, those areas that you know about long before the market gets there. Guys, divergence highs, divergence lows, Fibonacci support, Fibonacci resistance, yellow one-to-ones. All of these can stop the market, guys. All of these areas are where the large crowd are making decisions, where they're prone to fight one another, where entries, exits, bounces, all that stuff happens. So to define a termination condition, you're going to let the large crowd get there. And the phrase that I use is price, dynamic Renko bars, reach the area, whether it's resistance or whether it's support. And when price reaches the area, all of your trigger lines, both small and large, remain below the area of resistance. Or when price reaches support, could also be a one-to-one divergence low, all four trigger lines remain above that area, guys. That's your textbook termination. This is a look that lets you know that the area may stop the market, may create an untradeable bounce, guys. There could be a fight between the buyers and sellers. And the reality is you don't want to be a part of their fight because you will lose more than you win typically. That's why rule number 2 is in place, to keep you from trading in the areas that may stop the market. These areas are so powerful that when they reverse the market, When that termination from a high makes those large triggers roll from green to red, we're going to call it a strong top, guys. And while you don't need a strong top for the high probability trend trade, you're going to use it for the second trade in the plan that I give you. And when price reaches support, none of the triggers break, it reverses the market. That's a strong bottom. And really what it's telling you is that the decisions made by the people in charge were so impactful that it completely changed the direction of the market. And this is what a termination looks like. But areas do break, typically with momentum. So I'm going to give you a recipe to know when it's time to look for that next trade after we've reached a termination, guys. This is what it looks like when an area breaks. Going left from right, our area is resistance. Price reached resistance. None of the triggers are through. There's your termination condition. Just sit on your hands. Wait for the reaction. See what they do. If two of your trigger lines get above, both small break through, and the large triggers, two of them remain below. Guys, if you have momentum, this area does have the potential to break, but this isn't your best look. On the plan that I'm going to give you guys, the KISS plan, there is a look to take advantage of areas with the potential to break, but it's going to take three of those trigger lines getting above the area of resistance or three of those trigger lines below the area of support. This is when the breakout is more likely. You see it's yellow, like caution, because it's not a clear path yet. The area is not completely broken. Areas are considered broken when all four trigger lines get through the area. When all four trigger lines get above resistance or all four trigger lines get below support, that's when the area is considered broken, guys. And your area of resistance becomes support. Your areas of support become resistance, guys, and your path will remain clear until you reach the next area. And it all happens on the most current bar. First it's a term, then it has potential, then it's got the best potential, and now it's broken, guys. And for the brand new users, I encourage you, let it either be a termination, let it be a clear path, and it will open the door to capitalize on these two in the middle. And that's the large chart, guys. Strong trigger lines lead the way. Termination conditions can stop that market, make sure that there are none. Once you understand momentum and path, you really do have everything that you need to be successful with the software. Once you understand momentum and path, guys, you're going to start to see more opportunities. You're going to be able to manage more assertively. I encourage you guys, focus on understanding momentum and path. And I'm going to give you the first gift right now. This is the spreadsheet used with with NinjaTrader. It's the Nexgen tracking sheet. And your first page is a study guide. This is what it looks like to have strong triggers. There's about 60 pictures. This is what it looks like when they're weak. This is your clear path. These are your termination conditions, guys. And all of these pictures that I've put into here for you, this is the beginning, right? This is the start of your study. Get a foundation, and then, guys, go take 25 pictures of your own. You'll never make mistakes on the large chart if you commit the time, the repetition to get where you need to be. And then once you have momentum and path, we're going to go to find some entries, guys. And we're going to use it on the smaller, faster chart. And you're going to use a limit order to buy or sell a pullback at an area inside of triggers. So when the large chart says down, when it has momentum, when there's that good potential to break, guys, you're going to take and dissect that one bar. You're going to see the pullback, the fight from the small crowd, pull back to an area, fibs, mids, bands, yellow 1-to-1s, and the areas need to be inside of those large triggers. And we do that because large triggers are just a moving average, and price returns to large triggers, guys, whether it's the big chart or the little chart. So what we've done, what John Novak has done, I had nothing to do with it, is you have large triggers from both charts on your entry chart, because large triggers will define the retracement zone. Large triggers will let you know where the pullback is most likely to go. And then it's the areas inside, fibs, mid-bands, yellow 1-to-1s, is where the market is most likely to bounce and continue with all of those large chart advantages. There's a look favorable large triggers. When the large and synthetic, when both large triggers are overlapping, one on top of the other, guys, this creates the smallest little space to put areas. Favorable large triggers will reduce risk. Favorable large triggers will increase accuracy, guys. The further apart these trigger lines are, the more risk you'll have on a trade, the more options for entry you're going to see. So brand new users, I love favorable large triggers. As you grow, you'll work outside of these, but it's just a pattern. Entry is it's an entry pattern. It's the same thing every time. So learn the language. When the large chart rules are met, when you have momentum, when the path is clear, guys, everything's going to be going up on your small chart. The beginning of your entry pattern is a reversal bar on the small chart, a down bar against all of the up bars. And it's not a reversal of the market, guys. It's just the beginning of that pullback, that push from the small crowd. You can define where the pullback is most likely to go using large and synthetic triggers. The red box, I'm most likely to see down bars somewhere from the top of the lines to the bottom of the lines. That's it. And it's most likely to bounce at the areas within, whether it's a fib, a midband, or a yellow 1-to-1. One area is not more important than the other, guys. They're all brick walls that could create a bounce. Sometimes there's multiples, sometimes there's singles. If there are multiple areas, it will create a window. I call it the window of opportunity. Your job is to activate a limit order at the top of that window, just above the area closest to the reversal bar. Guys, this is your entry for the high probability trend trade. This is the one that reduces risk. This is the one that maximizes profit potential, guys. This is the entry that when the rules are true, typically wins up to 70 to 80% of the time. Because you can define retracement zones, because you can define bounce points, guys, anything below the triggers, anything under the triggers for a long trade beyond the retracement zone is not a part of the window. It's not a part of the entry equation. This is actually where rule number 3 is no longer in play, where that advantage goes out the window. Once you get to the wrong side of the triggers, where the market shouldn't go, guys, no entries are taken, because you don't know if, when, or where that market may continue up. And then to go the other direction, when the large chart's down with momentum and nothing in the way, it seems counterintuitive, but we're going to wait for an up bar on that smaller, faster chart, guys. And the reversal bar signals the beginning of the pullback. It's the fight by the small crowd. It's most likely to retrace somewhere from the bottom to the top of those large trigger lines, most likely to bounce at one of the areas within fibs, midbands, yellow 1-to-1s. And guys, anything on the wrong side of the triggers is not a part of the equation. It is not an entry, because once you get beyond the retracement zone, guys, you don't know if, when, or where that market is going to continue down. Very avoidable losers by not getting in on the other side of the triggers. And we are so adamant about that, recognizing the loss of advantage, that your initial stops in the plan that I'm going to give you guys are placed 4 to 5 ticks beyond the trigger lines, where the market should not go. And man, I always feel bad telling you guys this, but it's kind of like a fact of life. Your stop will get hit from time to time, guys. Anything that wins 70 to 80% of the time has to lose 20 to 30% of the time. And this is typically a pretty small loss, but it is a loss. Don't accept losses with failure, guys. Don't equate them. This is recognizing that your advantage is gone, that the small crowd had it in them to push beyond, and you'll get to the point to where you're willingly putting your stop here, and you're saying things like, they're going to have to come get me, because I know more often than not they're going to bounce from that area. They're going to continue in the direction of the trend. So on the plan that I give you, initial stops are placed right where the market shouldn't go. And if you can't define where the market is most likely to continue, it's going to be difficult to manage these trades. I added this one in here. Guys, there are 3 entries that I see new users take, and I want to talk about them and how they affect the trade that you're in. The first one is up here before the reversal bar, guys. A lot of people are jumping into the market with momentum and path, and there's absolutely nothing wrong with that. You do you. But if you get that reversal bar, if you just jump in, guys, your stop goes where the market shouldn't go. It's huge risk. If you just jump in, your profit potential is super low. You were right up against where you're going. And guys, this reversal bar is an awesome exit. And if the rules are really met for a trend trade, very often your failed momentum trade will turn into a trend trade. One of the second ones that I see a lot, and we're all guilty of this, is the market doesn't make your entry point and it starts to go up, and that fear of missing out kicks in, guys. And I can't tell you how many people I see entering on the top tick of a bar that never even becomes an up bar because they just couldn't stand the thought of not being a part of that trade if it went without them. And again, all it does is it increases your risk and it minimizes your profit potential, guys. And the hope is that you'll go back and study this pattern, that you'll recognize this pattern, and that you will commit to the entry at the area inside of triggers, because this is the one with the least amount of risk, and this is the one with the absolute highest profit potential, guys. And we all succumb to the first two as new users. It's okay. But the goal is to get to the third one. And one of the easy ways to do that is just go back and study the pattern, guys. And you don't even have to be in the market to do this. You can study this pattern, go back on the large chart. If there is odds favorable momentum, if you have strong triggers, if at least 3 of the trigger lines are through the area, you're going to see these tails, these wicks, these shadows, whatever you've grown up calling them. This is the fight on the small crowd. Oops, I don't think I've even opened Snag It yet today. So before we get done with NinjaTrader, I want to go over this, guys. This is going to be your study tool. You're going to go back and you're going to circle these tails when the rules are met. And if that circle or square or whatever shape you decide to use lines up with an area inside of triggers, guys, that's your pattern. That's the whole trade put together, and it will look like this pretty much every time you take the trade. When you make the decision that it's time to enter, the market is trading all the way up here, and it doesn't look like it has very much room to get to trouble, and this concerns new users a little bit. Your small chart may have hit some 1-to-1s, and this concerns new users. Your small chart, small trigger is going to roll, and this concerns new users, guys. And this is why it's so important to learn that momentum is defined on the large chart, that your clear path is defined on the large chart, and inside this one bar that had very little room to trouble, you're going to see a retracement and hopefully a bounce in continuation. And by having that great entry, it increases profit potential. It gives you room to get to trouble. By having that great entry, it's going to give you the least amount of risk on that trade. You can go back and study this pattern without ever taking a trade, guys. You can go back and on your large chart, if you see strong triggers, if your path is clear, circle the tail. And when you have both, this is the easiest trade that you will ever take, guys. This is the best of the best, the highest probability. This is the one that gives you warm fuzzies. And because it's Monday, it's not always easy to find one, but there is a tail with momentum and path. Does everybody see it? I just circled it on my large chart. This was at about 5 a.m. this morning. Let's go see what it looks like on a smaller, faster chart. If I just scroll back and look for that circle, there's my reversal bar, and they didn't make it to the area inside of triggers, and then they give me a second reversal bar, and it bounces 1, 2, 3, 4 times off the mid band right in the retracement zone before it heads up to Fibonacci resistance. And guys, this is your pattern, and you don't have to take trades to commit the pattern to memory. Go back, find your tails with the potential, circle them, see what they look like. And what you'll recognize on the spreadsheet that I gave you guys is that if you go through the client trades, over 500 trades, guys, the patterns are the patterns. And that one's no longer available. I should probably clean that out one day. I keep threatening to do it. Well, look at this one. With momentum, with the potential to break, there's your pullback to the area inside of triggers and profits right down to targets, guys. It's awesome. That's the pattern. Go study it, practice it, commit it to memory. Take advantage of having those advantages, guys. Are there any questions about the high probability trend trade? Remember, this is your foundation. These are your rules, guys. This is your basis, your very basic approach to reading the software so that you can see more. Before we get into TradingView, I'm going to remind you that every morning we go through the rules, learn the rules. That's your responsibility. Learn the rules, learn the looks, learn the patterns. Practice the looks, practice the rules, practice the patterns, and post your trades in the room, guys. Post your trades in the room for feedback. It's terrifying to put yourself in front of people. My whole job revolves around being able to see what you guys are doing so I can help you do it better. And keep it simple. That's the second thing that I'm going to give you, and I may have already given it. I'm going to give you the KISS plan. Guys, in the KISS plan, that's TradingView, it's a stepping stone in your learning journey, guys. It's designed to teach you how to read your indicators, and these trades are designed to optimize your chances of success. Confidence comes from the memory of success, one of my favorite sayings. And if you can, as a brand new user, recognize 3 rules on 2 charts, you can optimize your chances of success. You can begin to feel confident. You can begin to move forward. It tells you that you're using 2 charts, where your rules are met, gives you a checklist for entry, and guys, it even gives you a very pragmatic if-then scenario for management. It opens the door for that 50-50 trade, 3 of the 4 trigger lines through, gives you a checklist for entry, gives you a way to management. When I say I give you everything that you need to be successful with the software, guys, I mean it 100%. You now have the rules. We've covered what they mean. You'll have to study them to commit them to memory. You can simulate, you can practice, you can post in the room, you can get feedback on everything that you do. And guys, one of the most common things I can tell you is that the average new user is about a 1/4 inch away from perfection when they're learning. And when you post in the room, I can find the one thing that's going to clear up a misconception. I can find the one thing that's going to help you have less risk. I can find the one thing that's going to get you that better entry. Because when you post in my room, guys, I don't have an emotional connection to your trade. I don't have a I hope it wins or hope it loses mentality or hope it doesn't lose. What I can do is I can look at, if you tell me exactly how you read your indicators. Hey, Mark, here's my strong triggers. And I'm going to say, absolutely, you're doing a great job with momentum. Hey, Mark, this is my clear path. And I'll say, whoa, it's only the potential to break because only a couple of the trigger lines are through. And then you'll say, hey, Mark, I pulled back to an area inside of triggers for my entry. I'll be like, this is outstanding. Great job. Repeat this pattern. So post in the room, guys, and annotate charts. The more you annotate charts in the beginning, the quicker these things commit to memory. Every time you type on a chart, it creates this neurological connection between what your eyes see and what your brain thinks, and get your brain thinking in advantages. And most importantly, guys, your annotations will serve as the recipe for success. When you're doing great things and you're reading the same damn thing on the chart every day when I take a great trade, it says the same thing. It says odds favorable, momentum, and no terminations. And now I'm starting to believe that may be the path to success. And it's saying areas inside of favorable large triggers. And I'm convinced that this is what it's going to take to get me where I want to be, guys. And you will find success faster like that. So go through it, study it, practice, tear it up, make mistakes, but get it in the room. Learn these patterns, guys. It's just a pattern. And now we'll go to TradingView. And a lot of you are moving over to TradingView, and a lot of you are doing great things on TradingView. If you have transitioned from NinjaTrader to TradingView, I do want you to remember apples and oranges, guys. Everything that we talked about on NinjaTrader is not how to trade TradingView, and it's easy to confuse the language. And for most people, it's hard to look at both platforms. Some of you are gifted, Jen, and can do it. I can't. I can't look at NinjaTrader and TradingView at the same time without forming opinions. I find simplicity is easier. But here comes your TradingView plan. The only real difference in indicators is that you won't have Fibonacci. You'll have supply and demand. There are pay for supply and demand zones from Chart Prime, which are absolutely amazing. I couldn't imagine trading without them. There are free versions as well that are almost as good, but knowing where the market may stop is a key part of what we do, guys. So make sure that you have something. Your large chart is a 15-minute chart. It's not a Renko bar chart. You could literally have 20 bars on your large chart, Renko, in the time it takes to form one on your 15 minutes. So your large chart is direction, momentum, key targets, terminations. It has the exact same role. It's just it is glacier, guys. It is slow moving. And then your small chart is a 1-minute chart. This defines the immediate strength using trigger lines. This is where we're going to define entry points. And again, the big chart leads the way, guys. When the big chart says up, up is the easiest way. When the big chart says strength, up, nothing in the way, that's when we go and we let the small chart do its thing and pinpoint entries. Don't get distraught if your small chart looks like it's going down and your large chart looks like it's going up. Your small chart is most likely going down to get you to your great entry to go with the large chart. So to read the large chart, there's 3 things that I do before I ever consider going to the small chart, guys. The first thing is I say, which direction are my small triggers going on the large chart? If you have not already gotten it, the plan that I give you has very minimal workspaces for TradingView. I'll drop it in the room real quick just to make sure you guys have it. There's your TradingView KISS plan designed to optimize your chances of success. There's your TradingView spreadsheet designed to help you guys recognize patterns. But there's a very minimal workspace, guys. It takes the large triggers off of the large chart because honestly, it's too slow. It's so slow. The large triggers are just a distraction. It also takes the background colors off because red and green don't play into the rules, guys. It's either up or down with your small triggers. That's what defines direction. That's what lets you know which way you should be looking for your rules to be met. Once you decide up or down, there are 3 places where price could be trading. So you ask yourself, where is the current price? Current is the most important word there in relationship to the triggers. Current price will be highlighted. You'll see the top of the bar. And it could be to the left of the triggers. It could be inside of the triggers. It could be to the right of the triggers. So if the market is going down, it's still either left, inside, or right. If it's going up, it's either left, inside, or right. That doesn't change based on direction. And you can see inside of one bar on the 15-minute, you can have it to the left, the inside, and to the right. So it's important that you say, where is current price? Because this is going to set you up to define momentum, and this is going to get you ready to manage these trades. If you are left of the small triggers, you are on the strong side. And again, I hope that word creates confidence. This is where your small chart areas are most likely to break. This is what I'm looking for to take a momentum style trade, guys. This is my bigger moves look when I'm on the right side of the left side of the triggers, the strong side of the triggers. If I am to the right of the triggers, this is the weak side of the triggers, guys. This is where 1-minute areas are most likely to become problematic. This is where getting paid quickly, getting to 0 loss levels, break even, ASAFP, because it's weak. And when I am to the right side of those triggers, this is where reversals happen in the market. So I'm still looking for long trades, but I'm managing them very assertively. And then if I'm inside, this is the transition. It's neither strong nor weak. I'm not looking for momentum trades, but when I reach those 1 minute areas, I'm going to protect myself, but not necessarily exit all of my contracts, guys. This is kind of the middle of the road vanilla. Strong is always the best. Weak is always the most aggressive management. And the transition just means, hey, let's go with the flow and see what happens, guys. And then once you define the direction, it should take you a fraction of a second. And you say where price is trading. The final question is, do I have room to trouble? Do I have room to a zone? Do I have room to one-to-ones? Do I have room to divergence highs and lows, to mid-bands, to VWAPs, to anything that could stop my forward progress? And if the answer is yep, I've got all the room, that's the question answered that takes you to the small chart. And there are two ways to enter on the small chart. And the first one, and the least likely to happen one, is what we call the momentum trade. And this is your checklist, guys, and this is on the plan that I gave you. You have to be able to say yes to go to number 2. You have to be able to say yes to go to number 3. And number 1 is no terminations or zones on the 15-minute. And I really want to stress that, guys. If you don't have room to targets here, there's no reason to go to that 1 minute. And then you're going to make sure that you're on the strong side of the triggers, guys. To the left of the triggers on the large chart. And on the small chart, you must have strong triggers. And that's that same lesson from Ninja Trader. Separation between the small and large. Everything going the same direction. If you don't have strong triggers, if the smalls have turned against you, if the smalls have worked inside of the large, guys, you can't take a momentum trade. You don't have momentum. And it's right there in the name. And then finally, you're going to use a limit order to buy or sell at an HVA or an area. And this is the only trade that uses a limit order. This is the only trade where you will wait for the market to come to you. And it's going to look like this, guys. The smalls are up. That's number 1. I'm on the strong side of the smalls. That's number 2. There's nothing in the way. My large chart gives me everything that I need to look for a momentum trade. Zone breaks. And this is important because when resistance breaks, it behaves as support. And when support breaks, it behaves as resistance. So you want to see price break away from that area. And if it has strong triggers, you will wait right at the top of that zone with a limit order. And if it comes back and gets you, you're in a momentum trade. And what you're saying when you take a momentum trade is, I sure hope all that momentum pushes it up to my target. And that's it. It's based solely in momentum, guys. Stops will be placed just below the zone that gets you in, because if it gets below the thing you're expecting to hold, your advantage is gone. In a downtrend, smalls are down, strong side of the smalls. It breaks support, pulls back to it as resistance, and you're just hoping the momentum carries you down. This is the only trade, guys, that you're going to use a limit order on. If you don't have momentum and you're activating a limit order, you're creating challenges for yourself. Trust me on this one. Stops go a few ticks beyond the zone. The most common trade, this is my favorite trade, is the trend trade. Trading with the trend, guys. And again, don't even go look if the 15-minute is trading into trouble. So 15-minute, not trading directly into areas, this sets it off. The 1 minute, not trading directly into areas, guys. Room to targets. Give yourself some breathing room before you hit something that could create a bounce. And then you're going to buy or sell a close on the correct side of the small triggers at a 1 minute mid-band or area. And it looks like this. The smalls are up. They're in transition. They're inside. That doesn't pull me out of long trades, looking for long trades. Even the weak side doesn't take me out of looking for long trades. I'm always looking to trade with these triggers. On my small chart, they don't break away from the area, so there is no momentum trade. Small triggers roll against me. This is what sets off the call in your shots part of this trade. Once the small triggers roll down, when everything over here says up, your job is to start looking lower, to look for areas, mid bands, one-to-one, zones. And you're just going to say to yourself, okay, they've got to pull back to this area for me to take a trade. But we don't enter at the areas. We're not using limit orders. NinjaTrader users have to forget that. We're waiting for an up bar to go up with a large chart, and it must close on the correct side of the triggers. And the correct side of the triggers is the weak side of those down triggers. We're pulling those triggers out of the fight. And guys, this is your entry for the trend trade. And you're going to be tempted to take a close on the correct side of the triggers that's not from an area. Guys, areas create the bounce. The market is a tennis ball. The areas are the brick wall. And this is where they're typically looking to get. So that becomes your entry for a long trade. And then when the market is down, the triggers are down, strong side of the triggers, room to trouble, the moment those small triggers roll against you guys, momentum trades are off the table. And you're just going to look up and say, hey, look, there's a mid band. There's a zone. But I'm not going to enter with a limit order, and I'm not going to enter because of a white bar, and I'm not going to enter on an up bar. I'm going to wait for a down bar that closes on the weak side of those triggers against me. And guys, that's the one that typically takes you to the promised land. And that is TradingView, guys. You guys have two potential workspaces. Some of you are NinjaTrader. And look at that, price reached an area, none of the triggers broke, and we got a big bounce. Only 2 triggers through, the area couldn't break. Price pulled back to support, no triggers broke, giant bounce, straight to resistance, no triggers broke, giant bounce, back to support, no triggers broke, another giant bounce. Guys, you've got every freaking lesson right there inside of one bar. S&P. Let's see what the S&P is doing. The S&P has momentum. And the S&P has a clear path. And the S&P just pulled back to an area inside of triggers. And it looks like we may not get a winner. Or we may. I don't know. But that's your pattern, guys. That's the momentum. That's the path. And if you back it up, area inside of triggers, area inside of triggers. And this one may have just been close enough to that fib to be in that area. And it didn't work out. But let's zoom that in real quick. I don't think those areas were inside of triggers, were they? Do you guys see that? Areas on the wrong side of the triggers, above the triggers. That's rule 3 not met. Make sure that you can read your charts, guys. You guys that keep them like this, it's hard to see that. Get that visual, guys. Make sure you can see everything that you need to see there. TradingView. This is gold. That is small triggers up, strong side of the triggers. Small triggers have rolled against me, so what's my option? Wait for a pullback to an area and a close on the correct side of the triggers. Does that make sense, everybody? That's your gold read right now. We'll get some paper trading up in case we take it. It says up. It says strong. I've got room to trouble, but because those small triggers rolled against me, my job is to wait for it to pull lower, to find that entry on the correct side of the small triggers, to give me the fighting chance to get to where I want to be. Small triggers down. Current price is transition. If I take a close on the correct side of the triggers, 140, I may have room to get down to that VWAP, to get down to trouble. I've got 37 seconds to think about it. Are there any questions about TradingView, how to read the large chart? Are there any questions about NinjaTrader, where your rules are met? You guys are amazing. Cool. So let's do this. I am going to take a few minutes. I'm going to walk around, stretch my legs, kiss my wife. When I come back, we're going to click on any pictures that were posted. And guys, honestly, it looks like we're going to have a lot of time in the live market. So I like that. If the rules are met for my TradingView KISS plan, guys, we'll simulate. We'll practice, we'll take, we'll manage. But the only way I will pull the trigger in front of you guys is if the checklists are true. And the same is true for NinjaTrader. If I can answer yes to my checklist, we'll manage it according to what's going on here. And then for you guys that didn't download these yet, there's your KISS plan and your spreadsheets for both. And maybe since it looks like it's going to be a pretty long day, when I come back, we'll talk a little bit about management for both charts, for both platforms. But I will be back in about 5 minutes, guys. Go stretch your legs. Second hour. So I'm going to scroll up to the top. I'm going to click on all 7 charts that were posted. And guys, I want to remind you, I am not the trade police. I don't want to be the trade police. I don't want to tell you what you can and can't do. I don't want to suggest what you should or should not do. What I want to do is I want to talk about the advantages that I see. I want to look at your reads on the charts. I want to make sure that you're reading your indicators correctly. And if there is anything that I can do to help you, I'm going to help you. That's it. So Pete got us going here, and Pete says, check it out. First trade of the day, little base hit. He says it's a weak top. And guys, we talked about the idea that when no triggers make it through and it reverses the market, it's a strong top. And this is a weak top because the small triggers got through. And Pete talks himself through everything when he posted in the room. He goes, this is my weak top. My triggers rolled. I have odds favorable momentum. 50-50 is code for, hey, it's got the potential to break with that momentum. Over here, pull back to the fib, inside large triggers, and he said, you know what? Because it's only 2 triggers, because it's a weak top, I'm going to let them continue down. I'm going to let them start in the direction of my trade, because Pete understands he's in control, and the market can't make him enter. And he gets in, and Pete, you do it great, man. It is $100 on the first contract, and it's only $40 on the second. But with the potential to break and trouble in the way, the first thing Pete says is, hey, this is not the perfect trade. Let me manage it a little more assertively. And Pete, nicely done. That's a great look. I like it. And I'm going to slow roll through your charts, guys. We're going to do them just like this. And then his second trade. The market continues down. The momentum is still strong. And Pete says, all right, I made 140 here. But with everything going down, with absolutely nothing in the way, let me get below the thing that could create a bounce. Let me get below the point where decisions are made. And with every indicator down, I will jump the fudge in and take them both off at Fibonacci. And I believe that was from 41 to 30, $180 trade, $140 trade, guys. And 140 and 180 is what? 280, 320? 220? Oh, 220 on the trade? Oh yeah, 41 to 30. You guys know how I am in math. Great job, Pete. So 220, 140, 360, and your timestamp is at 7:45 a.m. What a great way to start the day. It's hard to get upset about being $40 away from a 6-figure income before your bagel even starts to get cold. All right, and then we go to the trading view read. I love this. I love having both in the room. So the triggers are down. Transition, room to trouble. Perfect large chart annotation. Andy says, here's my pullback. There's my close below. There's not a lot of room to trouble, so I'm going to get in after trouble, after the thing that could create the bounce, and I'm going to ride it down to trouble. And it's an easy 2-lot, $340. Andy, great patience, waiting for the market to get to the good side of the triggers, and then taking that little extra step that, hey, let me make sure that I don't trade directly into the zone. I'll trade from the other side of the zone. I love it, Andy. Great job this morning. This looks like Miss Jen. Reason I took this trade, combine Ninja and TV. Ninja termination, TV price pivot stop out. Small chart has begun the down. Jen, you take the white bar, which is right at the Ninja Trader termination, and you get in when the next bar opens below the HVA. Beautiful entry right at 17. You take half off, making sure you get paid, and the other half at a mid-band that could create a trend trade to go with those up triggers. And Jen, it is absolutely perfect capturing of the move within the move. The short to get to the long, and it's using that bar pattern that you've become so good at. Great job, Miss Jen. Nicely done. This looks like Pete. Three divergences. Three divergences. Some of you are like, why does he notice three divergences? Well, guys, let me tell you. Let me tell you. We got all the time in the world this morning, so I'm going to go to a lesson, guys. Three divergences in the same price range. I'm going to go straight to the instructions on the website. Three divergences in the same price range can terminate a trend, guys. And you'll see it in two places. So let's do some smart stuff. If we can get these to load. Oh, I see it right there. When you see, that's not it, three divergences in the same price range on your small chart, this is your small chart showing you the change that you can't see on the large chart. Because if you remember, divergence is a loss of momentum. Three divergences on the small chart is the only small chart termination condition. That's the only reason I could ever find to stay out of a high probability trend trade. Pete noticed three divergences on the large chart, guys, and in the same general price range cause major reversals typically. So Pete says, man, with three divergences on the large chart, this bad boy is more likely to go down. And it's awesome recognition. And he says, because of that, I'm not going to take the trend trade directly into Fibonacci. I'm going to let it get below Fibonacci. And then I'm going to ride that momentum. I'm going to take half off here. And then if I lose momentum, there's that reversal bar on the wrong side of the triggers. I'll take an exit. Outstanding chart read on the large chart. Great job on momentum on the small chart. Three triggers through. Great patience on the entry. Nice job, Pete. Pete, we have gotten calm Pete back. We've gotten mellow Pete back. We've gotten, hey, let's wait a second, let it be perfect Pete back. Do you feel like it? Because your trading looks like it. You've given yourself that 20-second delay, and it's just spot on, man. Great job. Alex, we got you. I love it. Let's see what we have here. Momentum in a clear path on the large chart. You study the distance between the lines. Is that between the trigger lines? I want to make sure. Are you talking about the trigger lines here? Just want to make sure we're reading. And guys, this is one of the things that unfortunately you guys have to put up with me as a brand new user, is we will learn to talk to one another. I will learn all of your annotations, what they mean, but I may ask questions in the beginning. I'm not knocking. Are you looking at the space between the triggers? Because that might be interesting, right? If they're down, you're good. And if you are, let's see, you are strong side, it's good. You've got room to trouble, it's good. The red lines. The red lines. Down here, resistance, support. Study the distance between the lines. I might have you post a picture just so I know. You placed your trade at 25.089, getting out at 25.076. Great job. So what was it? Let's look at it. All the momentum, strong side of down triggers, nothing but room, and then you don't trade directly into it, which I think is amazing, and you take the close that gets beyond the thing that could create a bounce, and you ride that momentum down and make the money. Alex, I love this trade. I love it. This is just a breakout. This is taking the best of the best on both charts and finding a way with momentum and path. And you even mentioned that on the large chart. I've got momentum and there's nothing in the way. I love it. Nicely done. And then yellow dots. Absolutely. So let's see where you entered. Looks like a pullback to the area. Maybe a close above. This is your large chart. Is that right? On the large chart, the blue lines where we're going the same direction. Part of the green line has crossed the red line. The blue is touching and the other green line touching the wick long chart. Oh, goodness gracious, Alex. I'm struggling with this one. It looks like you're in a long trade from 746. But it also looks like you're down $30 with everything above you. You made 10,000. Okay. How? How did you make 10,000? Okay, there's your entry right there. Is this your large chart? And I'm assuming you made a pretend 10,000? Okay. So at the time of entry, I'm assuming this is it. The triggers were up. You were on the weak side of the triggers and you had room to the midband. I love it. That's great. And then the midband holds and it gives you 15, 30, 45. It gives you an hour worth of movement against you, Alex, and you stay in the trade. And that's interesting. Having reached an area, having that area reverse the market, having it pushed you below another area, and you chose to hold, and you held through about $500 or $600 per contracted drawdown. And I guess you knew something that it was going to go up. I'm not sure how. And it did, and it went up. And okay. Part of the green line has crossed the red line. I'd love to see your entry. Right? Yellow dots below, but they weren't. They were above. Alex, do you see how this is really difficult for me to talk about? Because I'm not sure how you entered. I'm not sure why you held for an hour in a market that went against you. And from where it bottomed out to at 20.46, so that's 26 points. Hold on. 26 points at $20 a point is 520 times 2 contracts. So with this down from the strong side of the triggers, is holding $1,000 into the hole with nothing to create a bounce? What I want you to ask yourself, and you don't have to answer in the room, is that the look that's going to get me paid more often than not? When the large chart is down, when I'm below everything, when it's reversed, right? And you can do whatever you want. Yeah, Alex, you may as well show me a picture of a supermodel and just tell me, hey, guess what? She really wants to hang out with you. This is just, I mean, 10,000 is cool, right? What a great feeling. But this one tells me how much you were up against, right? This tells me how mismanaged this trade had to be. Does that make sense? And I know that 10,000 feels good, right? 10,000 on simulator might as well be a nickel on the sidewalk. And what you're doing, and I've been using this phrase for 5 years, Alex, and I don't want you to think that I'm busting your chops here. But what happens is when you get lucky on simulator, your brain doesn't know the difference. Your brain thinks that you are a 10 grand in the bank badass, when the reality is you got lucky. You fought everything. You fought trend, you fought direction, you fought momentum, you fought areas, and you got lucky. And those short term, that dopamine kick that comes from the short term victory typically kills you when you go live, guys. When you get lucky on simulator, when you fight everything, it's tough. It's tough to repeat that, and the market will give it to you. It'll give you that $10,000 on simulator, and then when you go live, it'll take that 2 grand from you almost every time. So I love it. I like what you're doing, and if you were trading the large chart, once you get back here, Alex, and let's turn it into another lesson, right? Um, you're thinking long trades. Once you get about right here, once it goes through all the shenanigans, once it starts back up, that's where you could take almost the exact same entry with everything on your direction from the strong side of the triggers and make that 10 grand legitimate without the crazy fight drawdown. Does that make sense? So a little bit of patience. A little bit of patience goes a long way. Thank you for posting though, man. Don't stop. It's not fun to hear you got lucky. I know it's not. My brother used to tell me that all the time. Mark, you're breaking rules, you're getting lucky. You're breaking rules, you're getting lucky. I want you guys to remember that what we teach is a pattern. And the patterns can be proven to win more than they lose. And the patterns revolve around advantages. And when the advantages start to go away, the likelihood of success goes away with it. Great job, Alex. Seriously, great job. The fact that you're posting in the room, man, that's the first step. I can't stress that enough. One of the things I want you guys to get used to doing is talking about advantages. Do I have momentum? Is there a clear path? Can I define an entry? If you answer yes to all three, guys, this is the one. Go get it. Go take that trade. If one of your advantages is missing, it's medium probability, take it and manage. If two of them are missing, some of you will take it and manage hyper assertively, right? You're in control of the entry. Knowing what's working for you and against you guys, it helps you make decisions not only on getting in, but also on the management that you need to use, whether it is NinjaTrader or TradingView. I want you to get in the habit of saying, hey, this is perfect, or man, I'm fighting, and you'll get to the point to where you'll see the momentum and you'll say, but there's nowhere to go. And if you go long directly into two fibs with no triggers and it goes up to 79, your brain believes that trading in determination conditions is your path of success, right? And if you trade in determination conditions, the whole reason it's a rule is because you're likely to lose. You're likely to lose more than you win by trading in determination conditions. So it's just advantages. And that's our read here, guys. There's momentum and there's just no clear path. We're right into double decision-making zones. So it's okay to sit tight. Let some triggers get above. Find a way. The futures markets trade billions. Billions every day. All you have to catch is 3 to 400, 4 to 500, six-figure incomes, guys. Termination. Even with the momentum, look what the market did. If you thought you were going long, they ran you right over because decisions were made right at the key area. Good stuff. Good stuff. So triggers are down. Transition. 14 points back to the VWAP. Small triggers turned against me, which means I can't take a momentum trade. If I take a close below the small triggers, it puts me directly into trouble. The same trouble that's been holding for the last 45 minutes. Not your best look, not your highest probability. Weak side of down triggers, a little bit of room to trouble. If you took a close on the correct side of the small triggers from all of the areas, do you have room to make it back to 72.50? Not a whole lot. Is that your trade? That's up to you. That's a decision that you have to make. Triggers are up. Weak side of the triggers. Absolutely nowhere to go. No trades for me. Gold. Triggers are up. Directly into trouble, guys. Transition. I can't find my rules met. Do you guys remember when we talked in the very beginning of class and I said 90% of your day will be spent waiting for advantages? 90% of your day will be waiting. 90% of your days is doing nothing. 90% of your day is sitting on your hands. Slammed into the big fat fib, that's BFF. Reverse, triggers rolled, odds favorable. With the momentum, Pete says, I'm going to get paid on that push down, but I'm not going to sit and hope forever. If I lose momentum, I'm out. Pete, once again, dude, great job. I'm stealing these pictures for my Hall of Fame. It takes testosterone to post in front of the world. It does, guys. It's hard. It's hard. I skipped posting for about 3 or 4 months when I started with the software because my last name was Novak. I couldn't stand the thought of anybody in the world thinking that I was new to something that my brother wasn't new at, which is ridiculous, right? Just because we share a last name doesn't mean I should be good at it, right? So you get there. It takes time, guys. There's a process. There's a path. It's repetition. When we start the room, you guys are literally handed everything you could ever hope to get. You're given rules. You're given feedback 5 days a week on everything that you do. You're given a trading plan. You're given spreadsheets. Everything. The only thing that you're not given is the experience, guys. You don't have the reps. Stop putting the pressure on yourself to be great at this in the beginning. And I think this is a good segue because we're going to have to burn 2 hours and I'm through all the pictures, guys. Nexgen will supply the Fibonacci-based software, the trading rules, along with the coaching that will increase your odds of winning more than losing. After choosing Nexgen to be your technical analysis partner, do not worry about how long it will take you to become a profitable trader. Worry about the process of learning. The biggest roadblock for new users is focusing on the money, not the process. Saying things like, I have to get this done in the next 30 days. I have to be a great trader by the end of the week. And guys, it's a process. The simulation of your trading plan is not trading. It's practicing the movements of trading until they're so ingrained in your muscle memory that you no longer have to think about trading your plan consciously. Guys, that should be your first goal. To literally say, these are my rules. Let me keep practicing until I can do it. Let me get that muscle memory. Let me recognize the pattern that's likely to bring me success. Your second goal is to simulate 25 of the same trade setups, guys. To do the exact same thing 25 times. Trend trades, follow your plan without deviation, distracting thoughts, or hesitation to act. It's either rules met or rules not met. Focus on the process. Writing down using screencast picture, labeling your charts, what you could, should have done better. Getting feedback from the Nexgen staff, guys. This was written in 2008, by the way. Everyone is different. It'll take time to become unconsciously consistent at entering and exiting your trades. The more times you complete 25 of the exact same trades on simulation, posting charts for feedback in the room, and following your plan without deviation, distracting thoughts, or hesitation to act, the closer you will be to becoming a profitable trader. You will not have to win all 25 trades, guys. You can win 15, lose 10. You should be a winning trader if you manage the trades correctly. Great entries create very manageable trades. Each time you repeat the same 25 trades and successfully win overall, you then take the chance to trade real money, making sure you can follow your plan without deviation, distracting thoughts, or hesitation to act. That's where the prop firm comes in. That's when you get that prop firm account. That's where you start pushing, where you see if you can follow your plan. When you trade real money, if you fail to follow your plan, end up losing money, you are not a professional profitable trader yet. Do not despair, and do not do much financial damage. Go back and take another 25 trades on the simulator. Most traders will return to the simulator several times. I've done it about 50 times, and I'm not embarrassed to say that. This is expected, very common. You are not losing, you are learning. There is a difference. When you go live too soon, when you haven't practiced, guys, that's when you find yourself back on the simulator. There's no reason to burn money. That's what I did. Becoming great at any profession has a cost. Your cost will be small losing runs with live money. This is why the micro contracts are a good way to test your plan. Need to change that. This is why prop firms are a good way to test your plan. I'm going to change John's words. Don't tell him. Finally, you will learn to follow your plan to make money most of the time. Then you can call yourself a professional, profitable trader. Typically, after most traders achieve successful mindset, and the ability to no longer have to think about trading the rules consciously. They never lose it. Now, guys, this is the part. This is the part. If you tuned me out for the last 5 minutes, Nexgen provides analysis, rules, and coaching, guys. That's what we do. Only you yourself will be responsible for becoming the profitable trader. Nexgen is here to help, but you must do your part. And guys, I'm going to beat the shit out of this dead horse this morning. Forgive me for the language. If you are not posting in my room, you are missing the most valuable part of the education process, I think. I can't watch videos of Tiger Woods and become a pro golfer. I can't go to a basketball game and become an NBA guy. I've got to get out there. I've got to do it. I need a coach. I need someone to make me better at what I do, guys. And that's my job for you. So if you've been nervous about it, it's time to get on it. It's time to post your charts, guys. It's time to ask your questions. It's time to show me what you're doing, because what happens is, as a brand new user, I'm going to take this picture and then hold on. Hold on. See if I can find ones that are similar but different. There we go. 553. When I was brand new, you have posted literally thousands of trades. This right here, where it hadn't reached a fib, where I had momentum, where my triggers were through, where my path is clear, as a brand new user, I couldn't tell the difference between the two. I couldn't tell the difference between trading into a termination condition or having a clear path, guys. I struggled with understanding very basic concepts because I hadn't committed them to memory, and it wasn't until I started posting that I started getting the fix. And I would post this trade, and I'm just gonna air all my dirty laundry. I would post this trade right here, and I would annotate, because John would make me, and because I knew I needed odds favorable momentum and a clear path, I would type odds favorable momentum and clear path, regardless of what it was. And then I would say entry, loss, market hates me, I hate John Novak, Nexgen sucks, right? Because in my head, I had taken the perfect trade. In my head, I entered the market perfectly. In my head, the fact that I lost this trade only proves that the market sucks, that I'm perfect because I have an ego, and the market didn't do what it was supposed to do. And I don't know, maybe some of you have had this moment where you're like, oh man, I can't believe that trade lost. And then you have the courage to post it in the room. And suddenly your thoughts on the trade get a little different view. And I say something like, hey, you traded directly into a termination condition, and that's what created the giant bounce. And even with all that momentum, you're more likely to lose this than win it. And even with a great looking entry, you're more likely to lose it than win it. So do me a favor, and this is what John Novak did for me. When price reaches an area, count triggers. Make sure it's a clear path. And what'll happen is you'll start going through this process, and you'll start making sure it's a clear path. And you'll stop trading into termination conditions. And guys, that was my fix. That was the one that saved my bacon over time. Another one that I get very often is, hey Mark, my small triggers are up. I took the momentum trade, and maybe it was taken right here. And what it does is it opens the lesson. You can't take a momentum trade if you don't have momentum. And guys, it's an easy fix, but in the moment, I'm so excited about a termination that looks like it's reversing the market, and I'm so excited about going up that I ignore the fib, that I ignore that my large triggers are down, right? That I ignore that there's so many red flags that I don't see in the moment. But the second I post it in the room, I get the feedback, and I go, oh, man, now that there's no pressure or wins or losses, that makes sense. Let me take that feedback. Let me go back tomorrow morning. Let me look at my trades. Let me look at my tracking sheet. Let me see the problems that I tend to create for myself. Let me make sure that I know what it looks like when it's perfect. And guys, if you do this every morning, and most of you won't, I'm realistic. I stop getting my feelings hurt when you guys don't study. But if you go back every morning and you commit 5 minutes of your day, what did I do yesterday? Not what did I win or what did I lose? What did I do? What worked? What was the process that yielded the results, guys? What was the challenge that took away my success? What was the feedback that I got in class? What felt easy? What felt forced? Guys, if you do this every morning, you're going to get to where you want to be a lot faster. If you keep looking for money, if you keep chasing dollars, if you keep taking and say, well, sorry, Alex, I made $10 on the simulated trade. I must be a badass. I must be a great trader. How could I not be a great trader? I made 10 grand on sim. Guys, if all you do is chase money, simulator's going to let you get lucky. This is the Mark Novak timeline, where right here, after never posting in the class, never writing down a rule, never taking a picture, never using the spreadsheet, guys, I lost 5 grand instantly, 2 hours. You don't have to do that with prop firms anymore. But it literally took me 2 hours, 21 trades to knock $5,000 out of my account, and I was livid. And when it happened, I thought the software sucked. A true story. Maybe I shouldn't say that in a live environment, but I did. I thought my brother, and who thinks this about their brother? I was like, man, I hate John, and I hate Nexgen, and I'm angry at the software. And what I realized is that I didn't know shit. I didn't know rules. I'd never practiced. I'd never written a rule or taken a picture of my perfect trade. I never tried to learn the patterns, guys. So when I got to this point and I wanted to quit, and man, I wanted to quit, that's when I started taking pictures of my trades. That's when I started learning the rules, guys. That's when I started studying the patterns. And that's when I started climbing the ladder to the I did it stage. So everything that I do in this room is revolving around my personal failures, my personal challenges, the things that I had done wrong and the help that I received to fix them. And everything that I do in this room revolves around trying to keep you guys from making those same mistakes, from trading into areas, from breaking rules, right? From losing money that you don't have to lose. Zone tested on the large chart. Shorted HVA, got out at the mid-band. Did I do this HVA trade correctly or did I get lucky? Pablo, I'm going to show you. Jen took it too. I'm going to show you exactly why you did this great. Because it started with the large chart termination. You let the small triggers get below the large. And do you see this bar right here, Pablo, that down bar? When it's confirmed with the next down bar, that's when the pink line forms. The only thing you didn't do is wait for the pullback to the HVA. And I can't see the prices over here. 39.70.08. So you were in below trouble, odds favorable, HVA, and man, it's about as close to getting it right as you could get. And you had room to get down to the mid-band, and you had room to get down to the zone, which is one of the big things on the HVA trades, because you are going counter trend. And you did it really well, dude. Nice job. Nice job. The only thing you didn't get was the pullback to the HVA. And you said, well, it's down, it's going down, it's momentum, I'm below the zone, they're probably not going to get me. And that would be the only thing, is if they pulled back to that HVA from this entry, your stop really needs to be above these 1-to-1s. Because if they do pull back, that's what's going to give you the fighting chance. Does that make sense? Great picture, man. Great picture. Well, you had momentum on your side. And you had an awesome termination. And your management is brilliant. And that's the big thing. You took a shot, and you didn't hope for the home run. You said, pay me. Pay me right at trouble. And then we'll see what happens. Nicely done, Pablo. Miss Jen. Triggers down. Both in transition. Little bit of room to the VWAP. Pulls back to the zone. Closes below. And you say that it's room at 67. Where did you get in? You got in at 67. Oh, so you got in at the top of that bar. And then it hits the area. And you make a few ticks. And then it closes below again and it hits the area again. And you make a few more ticks. Nicely done, Jen. This one is interesting because from the transition side, you've got room to get back to the VWAP. It looks like, I can't tell where you entered. Did you enter at 61? So you entered at 61 and got stopped out at 67. Okay. That's what's hard to read on the minute bars. So Jen, let's do the idea. Absolutely no room from transition. So you traded directly into the management point. Just didn't give you any room to manage. But nothing changed, and then when you had room, you get it all back. So this is a good one, Jen, to be okay avoiding. And then when you wait for room, it changes everything. It changes the whole dynamic of the trade. Does that make sense? Yeah. I think that's the lesson. If you don't have room, it's okay to not take the trade. But I told you guys, not having room is the biggest mistake I see on my TradingView users, because it's minute bars, and it took 1, 2, 3, 4, 5, 6, 7, 8 minutes. You had 8 minutes to think about taking this trade, and yeah, and it does move well, it doesn't. It moves a minute at a time, right? It moves a minute at a time. And if you have to wait for the close of the bar, your only option is to wait for the close of the bar. And this bar closed all the way up here at 67. Not down here, I don't think. Maybe it closed at 62. That's when you got in right there. But it already reached trouble. Yeah, NASDAQ moves fast. And minute bars, you can get huge bars on the NASDAQ. I mean, this goes from 57 all the way to 74. That's a 17-point bar. So I don't know if it's faster, but they're definitely bigger. And when the market is volatile, you'll get some huge bars. That's why these little tiny bars are so sexy on the NASDAQ 1 minute. Yeah, those huge bars can affect risk. Good stuff though, Jen. All right, Andy Man. Odds favorable. 3 triggers through. You are in on the close on the correct side of the small triggers. 2 off at the previous divergence. 1 more at the divergence on the large. And then you give it a chance to run, and when it doesn't, you're out. Absolutely beautiful, Andy. 3 triggers through, potential to break. You let it push lower, and then you get in without fighting the small triggers, which is huge on the NASDAQ. It's huge on the NASDAQ, not fighting those small triggers. Really well done, Andy. Nothing like a $900 trade to get the day going, right? I am missing some fibs on my large chart. I'm going to reload my historical data and see if they come up. I feel like my 5-1 fibs aren't making it over that direction. Let's see if they do. Great job, everybody. Dun, dun, dun. That looks better. There we go. So termination reverses the market. That's a strong top. Smalls below the large, space between. That's odds favorable momentum. And guys, this is what we call the gap theory right here. And this is what lets me know that a midband is behaving as a termination condition. The gap theory states, I'm going to draw an arrow. The gap theory states if price reaches the midband and the large chart triggers are a full bar away, and you can define that with your large triggers above this reversal bar marker. Price is likely to close the gap to the triggers, guys, and this is how we define midbands as termination conditions. And that's exactly what's happening, which means that while this short looks enticing, the likelihood is that they may come back up and test these triggers before heading down. Nurse is off duty. See you in the morning. Sounds good, Andy. Go enjoy your day off. Jen, one of the things on the NASDAQ, you have to start learning to manage better. So, can I ask, Jen, do you have a written exit plan? Because you say you're taking profits on all contracts off too soon, which means that it might be a little emotionally driven, right? A market that's moving fast, hitting areas quickly. And I think one of the things that when you get to TradingView, so it has to be very if-then. So if I'm on the weak side of the triggers, right? Does it make sense to get paid at an area, Jen? What do you think? If I'm on the weak side of the triggers, does it make sense to make money? Absolutely it does. So if you got paid, let's see if we can do a money stamp. So if you got paid right here, right at the VWAP, and you're on the weak side of the triggers, that management makes sense, Jen. And the thing is you can't say you took it off too soon because the market continued down. You took it off at the right spot because you were on the transition side of the triggers. Do you see the difference in the language? Now, if you're on the strong side of the triggers, and you exit, here, let me make it so that we can see it over here. Now, if you're on the strong side of the triggers, and you've got all this room to the VWAP, and you exited right here because it scared you, that's a very different exit, wouldn't you agree? Because with strength and the perfect entry, it's more likely to continue. So it's totally different. This one, I would say you got out too soon. This one, I would say you managed it beautifully because the large chart leads the way on your management plan. And the fear of missing out after you see what it's, I'm changing fear of missing out. So there is the fear of missing out, right? FOMO. And I think what most people get are the fear of being left out. We're going to call it FOLO. And what that means, Jen, when you take the perfect exit from the weak side of the triggers right at a zone, right? And you see this, that The 6-year-old in you that didn't get invited to the birthday party can't stand seeing that. Can't stand seeing the other kids having fun, playing, maybe making money without you. So when you have solid exit rules, when you have a reason, you've got to be okay with what happens next. You were annoyed, of course you were. But Jen, that's not your money, is it? Because, and let's just see, from the, well, that's the strong side. Let's find one on the weak side. Let me put a circle on this. I love the management lessons, guys. I think management lessons are hugely important. From the weak side of the triggers, well, that's up. If you were going short and you held, you got crushed, right? And from the weak side of the triggers, Jen, if you trade into the zone, you get crushed. And there's all these things where you're like, okay, is it the one time that the market decided to run, even though it was weak side of the triggers, even though it was directly into the VWAP, even though it was directly into the mid bands? Or what happens more often than not? And that's where having plans, and I'm not just talking to Jen, I'm talking to everybody. That's where having a reason to exit makes sense, guys. And your large chart tells you precisely how you may need to manage these trades. And when we go back to it, where's my large chart read? When you're on the strong side, that's where maybe getting break even or even leaving a little risk, Jen, would have made all the sense in the world. But you were over here. You were where the 1 minute areas are most likely to bounce. I think your exit was perfect. I think your exit made sense. It was based on logic, not emotion. And I know that you were annoyed, and I won't tell you how to feel. I'm smarter than that. But I think you did it right. Because it made sense. Because your advantage wasn't there. Absolutely. Management's hard, guys. Entries are easy. Entries are so freaking easy. Because all you have to do to enter the market is pull the trigger and you're in, and that's it, right? How easy is that? It's what you do with that entry. So let's go through KISS management. We've got time. There's no pictures. Guys, management should be based on entry, right? Great entries create manageable trades. So let's talk about if you're in a high probability trend trade. Let's talk about management. Sounds good. Andy V, have a great day. Guys, if you enter at the area inside of triggers, and this is for my NinjaTrader users, your stop is 4 to 5 ticks beyond the triggers. And one of the things that having a written plan does is it makes the world if-then, if you will. Let me pull this one up real quick. So my initial stop, if I enter at the high probability trend trade, then my stop is 4 to 5 ticks beyond the triggers. It's if then. It's not if I need to make more money, if I lost the first trade, if I'm nervous. It's just, it is what it is. That's where the market should not go. And you'll always know your risk going into it. And then for the brand new user, targets are predefined. Because Jen, you just exemplified in front of everybody, right? That when you're in the trade and that market's moving, if you've got to make decisions based on your adrenaline, you might not make the right decision. So in the beginning, guys, they're predetermined. And if you don't get stopped out, then your new stop is 2 ticks above the reversal bar in the direction of your trade. And it's very emotionless and it's very pragmatic, and that's all it is. And your targets don't change based on your emotion as a brand new user. And if it hits your first target, you get paid, right? And then you go break even. If it doesn't hit your break even, it goes to the second target, you get paid. So for you NinjaTrader users, the KISS plan is designed 100% to help you learn how to pull emotion out of your trading, to help you embrace a plan that says, if this happens, then I'll do this. The same way, if everything says down, and I get a pullback to an area and a close on the correct side of the triggers, then I'll enter the trade, right? If I reach the VWAP and I'm on the weak side, I'll exit. If I'm on the transition side, I'll manage. If I'm on the strong side, maybe I'll just hide behind a zone. Always having a reason, guys, makes a huge difference. Thanks, Jen, for sharing that. And I guess they're not going to close the gap on this one, and that's okay. 2 triggers through. Whoops, this is the S&P. 2 triggers through. Divergences, pushes all the way down to the lowest area inside of triggers, and they try to push back up, but they have nowhere to go. Just nowhere to go. Room to targets. What do you guys want to talk about? What's on your mind? What can I help with? What are you good at, right? What are you good at? I'm good at recognizing momentum. I can see strong triggers from a mile away, but I need to work on termination conditions. Is there a way to make it easier? Probably. I can read my large chart. Most people say they can read their large chart, but then they struggle and they hesitate on their entries. Does anyone else have that challenge? Where the large chart read seems to come pretty natural, pretty quick, but the small chart entries take a minute. Nobody? Some of you? We'll take the cheater off. Do you guys want to see how to get good at it? Cool, so check it out, Justin. Dustin, ready? Does everybody see strong triggers here? That's the most important part because that's rule number 1. You don't, Alex? Smalls above the large, space between. Trigger lines have nothing to do with Fibonacci. Trigger lines have strong triggers has nothing to do even with the price bars. It's simply smalls above the large, space between the two, or smalls below the large, space between the two. All the colors match. So if you don't see strong triggers, then your way to get to where you need to be sooner than later, guys, is going to be to go to your spreadsheet, to go to the basic rules, and to start looking at these pictures of strong triggers, so you can burn it into your mind. But this is one of the things. How could you ever follow a plan that says that you need strong triggers if you don't take the time to study strong triggers? If you're chasing the money, not the advantages, you're missing out. And then we go to the path. 2 triggers are through, 2 triggers are not. Potential to break. Does that make sense? It's not 4 triggers through, so it's not a clear path. It's not no triggers through, so it's not a termination. We're literally looking at the potential to break because of momentum. Does that make sense? And if it doesn't, again, you've got to go back to the idea that it's imperative that you learn these first 2 things, that you learn these first 2 very basic ideas. And then once you do, we can go look for an entry. So when the rules are met and it's time to look for an entry, your large chart or your small chart looks like this. And guys, I want to show you something. This is how you slow down the market as you look at it. And again, it goes back to the language of the rules. I will buy a pullback. Let's not go all caps. I will buy a pullback. So you have to know what a pullback is. That little move down when everything says up. And then I will buy it at an area. And you've got to know that an area could be a fib, a mid-band, or a 1-to-1. And then here's where I'm going to pull my caps out. That area has to be inside of triggers. Now what I'm doing right now for you guys on NinjaTrader is I'm giving you the keys to the kingdom. Because the pullback hasn't started, right? Does everybody see that? My small chart screaming up. I haven't gotten a reversal bar. The pullback hasn't begun. The fight's not in play. But already, before that even happens, that's where the market is most likely to retrace if I get that pullback. And look at this. That is where that market is most likely to bounce if I get that pullback. And before I ever get the pullback, I already know that if it happens right now, my limit order goes a tick or two above that highest point of support. Does that make sense, everybody? I already know where I need to put my limit order before the pullback ever starts. So if you learn that language, buy or sell a pullback at an area inside of triggers, guys, the only option is right there, that tiny little box. And the market continues up, and there's my reversal bar. And my box got just a little bit bigger because of the midband. But the language is the same. Buy a pullback at an area inside of triggers. So what do you do when there's multiple areas, Big Rat? I love that question. Remember that we're getting in because of momentum, right? We're getting in because of the potential to break. So, Big Rat, because I have an absolute freight train, an absolute freight train of momentum, your limit order goes about 2 ticks above the highest point of support, the closest area to your reversal bar. So for a long trade, here we go, I've got the pictures. For a long trade, just above the highest point of support, closest to the reversal bar. For a short trade, just below the closest point. Does that make sense? And what you're doing is you're saying to yourself, because of the momentum, because of the clear path, because the large chart is perfect, I don't want to stumble over a couple pennies hoping to save a few dollars. And what you'll understand is that every word in the entry sequence has importance. Pullback, the triggers define where the retracement may go. The areas inside of the triggers define where it may bounce. Because of the large chart advantages, my job is to get in at the highest point that's most likely to create a bounce, because I don't want to miss this trade trying to save 20 bucks, right? I don't want to miss this trade trying to reduce risk by 5 or 6 ticks. So what happens is when you activate your limit order just above, if they come back, and I'm going to push it up even just a little bit more, and now we're in the trade. But here's the cool thing. I'm in the trade understanding, because I paid attention in class, that the market could also go to this fib. So if it does, I don't panic. That the market could also go to these yellow 1-to-1s. So if it does, I don't panic. That the market could even retrace all the way to the bottom of these triggers. So if it does, I don't panic. The only time my ears perk up is if those yahoos can get 4 or 5 ticks beyond the triggers, because this is where my advantage is no longer in play. Does that make sense, everybody? I know full well it could go below my entry. I just don't want to miss the entry, because this is an amazing look. And they push below. Well, they didn't. They give us a reversal bar right there, right off the highest point. They never made it to the lower areas. Oh, and they danced again. And that's your entry. But you take this entry with the understanding that it could go lower, that it could bounce lower, that it could even stop you out. You never know what may happen, but you do know that when the large chart rules are met, when you've got that advantage in play, that's the best spot. And if you fast forward, do you see that circle or the square that we built? It's right at the bottom of that tail, right? So go back and find momentum and the potential to break, and put a circle on a tail and scroll back, and what does it look like on this chart? Well, that one had 3 divergences. You probably wouldn't take it, but it still never got below the areas inside of triggers, did it? Never got to where the market shouldn't go. I think language is one of the most important things as you learn the software, because you know if it's an area inside of triggers, the only option in this trade is somewhere between the mid-band and those 1-to-1s. And if you get in at the lowest point, you didn't miss that trade, and you probably made a lot of money. And it just happens over and over and over. So that's one way you guys can slow things down. Learn the language, go back and study it when there's absolutely no pressure of an entry. When there's absolutely no fear of a loss, right? Go through the spreadsheet and check it out. There's momentum, breaking above, pull back to an area inside of triggers, and you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 bars to sit around and wait before your entry. You had about 8 minutes for your entry. 8 minutes where you were bored, hoping they were coming to get you. Let's click another pattern. Well, dang it, that's the same picture, isn't it? Click the link twice. There's your momentum. There's your 3 triggers. There's your pullback to the area inside of triggers. It's just a pattern. I don't think I can stress that enough, guys. It's a pattern. And I don't know if any of you are old like me. I'm 53. I remember going to the arcade in the 80s and learning a pattern for Pac-Man that kept me from dying. And if I just followed the pattern, I could make my quarter last for hours. And the same was on Galaga, and the same was on Defender, and the same was on Donkey Kong. And if you just learned the pattern, it became difficult to lose. But the second you went outside of that pattern, you lost a life. The kid with the quarter behind you got to take over the machine. So study patterns, guys. Study process. Process yields results. Hey, Wooter. 1322, huh? That's when you were born? Haha, you're 65. You weren't born in 1322. So you probably remember, you got me by 12 years, but you probably remember being a teenager fresh out of high school, going to the arcade with a giant comb in your back pocket, playing Donkey Kong with that cute girl in the Jordache jeans. Yeah. It's just patterns, guys. That's all it is. Over and over. You had the pet from Commodore. Same thing. Rinse and repeat, guys. And I think that's the one thing that I missed out on. 8K. Isn't that crazy? And it was amazing back then. I remember the Commodore. The Commodore 64 was the big one. And I think 64 was probably in reference to the memory or the processing speed. Who knows? Price makes trouble. Triggers stay above. It's okay to sit on your hands. Yep. All right, guys. I'm going to take 5 minutes. I'll leave you with crude oil. We'll see if they react at the key area. It's the speed of the chart. So, Big Rat, what I just did right there, do you know why you struggle? And I reserve my right to be wrong on this. Do you want to know why you struggle with the speed of the chart? And guys, this is for everybody in the room. If you struggle with the speed of the chart, it's because you don't know what it looks like when it's not moving. You don't know that with momentum and path, your only option is that area inside of triggers. And until you learn the pattern, until you learn that your entry is the freaking same every time, you're like, where is it? Is that going to be it? I wonder if it's there. Is it going to be up here? Where's my entry? And the reality is that if you learn that one phrase, area inside of triggers, It doesn't matter how fast the market's moving. You know where your trade is coming from. If my rules were met right here, in a fraction of a second, I know that that's the only areas inside of triggers. That's how long it takes. But I also know that I have a termination condition. And the speed, the market slows down with study. Why are you watching the NASDAQ if you don't know your patterns? Right? Why are you setting the batting cages to throw 100-mile-an-hour fastballs when you're an 8-year-old that just got off the freaking T-ball? Guys, the NASDAQ is too fast for 90% of the world. And the NASDAQ on the open is too fast for me, and I'm good at this stuff. If you're trying to make decisions on a market that lays out 75 bars in 5 seconds, man, that's not fair to you. So learn your patterns on a market that's tradable. Learn a pattern on a market that's smooth. Learn a pattern on a market that isn't known to absolutely. I know, so Big Rat, if the market's moving too fast for you to enter, if the market is moving too fast for you to enter, if there's bursts that make it where you can't put your entries in and your stops in, that's an untradeable market. Friday afternoon, I sent John Novak a message. I can't trade the NASDAQ anymore. It's moving too fast for me to get my stops in place. It's moving too fast for me to get my targets in the right spot. So it's okay. If you know the patterns but the market's too fast, it's untradeable. The problem is we want to find a way to make the untradeable tradable. We want to find a way to enter the market when the rules aren't met. We want to find a way to capitalize on moves that weren't ours in the first place. And I am so guilty of that, and that's where this is coming from. It's not any comment on your trading. No, we went to TV because TV doesn't crash. Because AMP Futures is the most popular brokerage on TradingView, and because we opened a prop firm and we wanted the most stable platform for our users with the best brokers to clear their trades. That's why we went to TradingView. NinjaTrader's very tradable. NASDAQ takes a certain skill set and a willingness to not trade it when it is untradeable. Confirmation on the 1-minute charts is way slower. If you have to be a NASDAQ trader, I don't know, you guys that have done both, would you agree that this, you've got a minute. I've got 34 seconds before this bar closes. I like that. I like that. But I also like Renko bars. So you got to go with what works for you, right? But I do think TradingView makes NASDAQ way more tradable for the average user. Way more tradable for the average user. Because you've really got to be in tune with what you're doing to trade the NASDAQ live and on Renko bars. Because they can be fast. But when NASDAQ is too fast to trade, usually these bars are huge and the risk is way bigger than I want to have anyway, and I just go make a sandwich, right? I go walk my dog. I go do anything other than decide that I absolutely positively have to be in the market if I can't trade the market. And guys, it's rare that that happens, but if it does, I just sit out. Let me see if I can find it. There we go. You will have to upgrade. Guys, this was my message to John Novak Friday afternoon. Too fast now. Shutting it down. Can't move stuff fast enough. And just above that was a picture of where the system caught the short and was driving it down, because that's a computer. The computer was fast enough. I wasn't. I had to quit. I had to say nope. It's too fast for me. Can't do it. Yeah, and let me know how I can help on TradingView. But guys, I'm going to take another break. When I come back, hopefully somebody gets a rule met, post a chart, or at least ask a question. And I'll see you guys in 5. Let's finish up. Smalls are up. Strong side of the smalls. Room to trouble. Does everybody see that on the large chart? Do you guys know that you can make these really big so you don't have to wonder? So what do I need? Small triggers have turned against me. So I don't have a momentum trade. That already failed. Didn't have anywhere to go. If I closed above the smalls, it's directly into a zone. Whoops. We'll see what they do, huh? Room to targets. This is where you have to make the decision on whether or not you want to trade into a zone. My plan says don't. Some of you are like, well, I'm on the strong side. I'm willing to give it a shot if it closes above. Everybody's different, guys. And remember, it's not my place to tell you how to trade. It's my job to make sure you recognize that this zone could stop the market the exact same way it did 1, 2, 3, 4, 5 times. It's already stopped it 5 times. What makes me believe it's gonna break for me on the 6th, right? Typically it's boredom. Boredom makes me believe it's gonna break for me on the 6th. Still didn't close above. Still pushing down. Pretty cool, right? Didn't have to guess or wish or want or hope. Just had to follow my plan. Still not going up. S&P's breaking up. We'll see what happens. That's the NASDAQ. That was your first pullback to an area inside of triggers. That was your second pullback to an area inside of triggers. That was your third pullback to an area inside of triggers, but with 3 divergences, many of you have your guard up. But with the small trigger rolling up, that would be your continuation look if you were going to try and take a shot with a close above. What would you guys like to talk about? What's on your mind? Man, termination still holding for now. Decisions are made at areas, guys. You got the automated, it's NASDAQ. You made this trade on your own. Wow, it moves fast. Haven't yet learned how to have another market open to switch to? No worries. You guys got the automated? Momentum, clear path, entry. Pulls back. You got in. Made some money. It does go fast. I love the automated, guys. The automated does 90% of the heavy lifting, is the easiest way to say it. It puts you in the best trades. Kathy, it didn't give you this one because there was no divergence, it looks like. Doesn't change the idea that it's a good trade. Missed the first choice, got the second choice, and yeah, it goes fast. Nice job. I like $150. Do that 3 times a day. Life is pretty easy. Nicely done. Termination still holding. Here, let's go. You know, the biggest thing on the automated system, guys, the entries are outstanding. It's going to be your ability to manage those great entries. It's going to be your ability to recognize exit conditions. So if you are on it, Kathy, have you already watched John's management video? Oh my gosh, I think everybody should watch this. Even if you're just a NinjaTrader user and you're not even using the automated system, I think that's a must watch for everybody. We'll We'll enable it, see if it gives us anything. Um, the ideas with management in that video are awesome, and I think that's probably one of the best ways I've seen John do it yet. Dreaming over something you can't afford yet, right? Yet. Learn those patterns. Take those trades. Learn those patterns. Insist. That's the greatest thing about day trading is that nobody, man, it still hasn't broken. Nobody can make you enter a trade. If somebody's behind you with a knife, guys, blink twice. But nobody can make you enter a trade if the rules aren't met. Nobody can make you trade into a zone. Nobody can make you try to take a momentum trade without momentum. Nobody can make you have to trade the NASDAQ. You're in control 100%. Which is why I stress, learn the basics, guys. Learn the simple little things. Be able to identify momentum. Know when there's a clear path. Define your entry. And I guess today one of the things that we learned, and maybe I don't talk about enough, is that if the market is moving too fast for you to trade, it's okay to not trade. That's the whole reason that I go to Forex Factory every morning. Because when there's high impact news, the market is typically too fast for me to trade. It's too quick for me to make decisions. And very often it still follows the patterns. If you go back historically after news releases, fibs still hold, trend trades still work. You just can't do it. It's just too fast. So there we go. Now if we got to close right at 64, that's about 5. That's about 5 points to trouble. If you got in at 57, just above the zone, that's about 4.5 points of trouble. We're still up strong side with room. 5, 4, 3, 2, 1, and we still don't have a close on the correct side of the triggers, which means my rules are still not met, which means I'm obligated by my plan to not, whoops. Guys, if you ever do that and mess up the bottom of your chart, hit F5, it'll reload it. I am 100% obligated because of my plan to sit on my hands and wait for the best trades. And if I'm not above trouble, it's not my best trade. And if I'm directly into trouble, it's not my best trade. And if it's directly into trouble, it's not my best trade. Mark, how can you ever make any money if you're never in the market? Well, you wait for your best trade. Five, 4, 3, 2, 1, and it still didn't give me an up bar on the correct side of those small triggers. You guys see that? And look what it's doing. Almost instantly went down. What do you want to talk about, guys? We've got another 30 minutes. We just keep watching our rules, keeping us out of a loser here. That's pretty awesome. And what's cool is the further it goes down here, the more room I have to there. May have to go TV, need prop, and everyone has dropped Ninja except the likes of Apex. Don't like the trailing threshold. Then there's the time deficit element. So much stacked against me obtaining success. Man, I guess. I don't know. I don't know that it's hard. It's hard with your schedule, right? There's no doubt about it. One of the cool things about TradingView is if you have an iPad, Big Rat, you can trade it from your iPad. You don't have to have a desktop computer. I've got it loaded up on my iPad. It's pretty awesome. Which means that you could do it at stops. You could do it over lunch. You could watch it iPhone's too small for me. Yeah. Um, I don't know. I think Nasdaq offers more than enough. Crude oil, I don't care for on TradingView. S&P seems to be just fine. A lot of people finding success in gold. Um, if you can't find a way to get the job done, we need to look at how you're approaching the job, I think. There's your first close above the triggers, guys. From the strong side, 1 minute areas are most likely to break. Some of you might take a shot on that one and say, you know what? It's worth the risk with the large chart look. Some of you are saying, I'm going to hold off and I'm going to wait for it to get above that zone. And if it starts to break above that zone, maybe I'll take an entry. But with a zone and an HVA and strong triggers down, maybe I'll just pause. And there's no right or wrong answer. It's just what's right for you. I don't know if there's more entries on TV. I think there's opportunity everywhere. I've never had a shortage of entries on TV. But isn't it cool with the timer? How you don't have to wait. And guys, now your small triggers are rolling up, which means that you're not fighting them anymore, right? I don't even have it open. But you're not fighting small triggers if they roll up. You've just got one pink line in the way. Paper trading. So you've got your line in the sand. And now we're just waiting. And it's still not going directly into trouble. And all those divergences. And it just pushed lower. Over and over. Have a steely ball. May have to try to figure out how to trade and roll. Yeah. And you may be able to. All those divergences said don't do it. I've had a couple over-the-road truckers do well. And it may mean that you drive during the day and you trade the European markets at night or the Asian markets at night. I've got a lot of people that work during the day that do that. 2 a.m. Eastern is when crude oil opens up. A lot of opportunities there. Nasdaq starts moving. I don't know. I wake up at 4 a.m. Pacific. That's 7 a.m. Eastern, but it's moving then. So you just gotta find when it works for you. They're trying. What do you want to talk about, guys? So, long trades are still on the table, right? It's up, it's strong, there's room. We're just waiting for it to be perfect. Does that make sense, everybody? Just because it didn't go here doesn't mean that there's not an opportunity. It just means we're waiting for a better one. We're waiting for some room to manage. We've got 22 seconds to think about it. But look at this. Now it's not strong triggers down. Now the small triggers are up. Now there's even more room to trouble. I got 11, 10, 9, 8. Just hope it doesn't run without me. 6, 5, 4, 3, 2, 1. Oh, and if you took that trade, right? That's a lot of risk. But where is it likely to go? Where's that zone? Somewhere up there, right? And now we'll just see what it does. You guys, it's simulator, but that fit my rules. And what's wrong with the trade? It's up, it's strong. These are up, they're above the large. I've got an HVA, I've got zones. Not a lot of room to the trouble. That's the only challenge. So as we get into trouble, we'll look for signs of change. We'll make sure that if they try to come against us, we'll manage, right? My initial stop is going to go down here below the pivot that gets me in. If you guys wanted to, you could even drop contracts and say, you know what, I'll take one off at trouble here. There we go. See if I can cover some commissions. As it gets up into the zone, I know that zone can stop it. Maybe I go break even, right? As it breaks up, I hide behind those HVA lines, and I'm just looking for that zone there. But all of that patience, guys. Maybe I take another one off at the top of the zone. I've got one contract left. I've got absolutely nothing to lose. 55 locked in. Is it going to make the zone from the strong side of the triggers in a clear path? Man, I hope so. If it does, cool. If it doesn't, I've already been paid twice. Do you guys see how that works? Just because it doesn't happen here doesn't mean that it's not going to happen. Just means you got to wait. There's another one. Another big old breakout bar. I'll go right behind that HVA line. I can't lose. I've already won. I'm getting tight on that zone. And cool, I'm out. How'd we do? $330. Anybody bummed about $330? It still might go up. Never been pissed off about $330. Did I break a rule or did I follow rules? And when I talked about management, I talked about areas that could create a bounce. I talked about protecting my investment. I talked about locking it in, you apex traders, right? I gave it room to run, and I said, man, with this breakout above that HVA, I'm just going to tighten up. It either hits it or it doesn't. And if it pulls back, guess what? I'll go long again. Didn't form an opinion. Just followed a rule. How do I know I followed a rule? Well, because when I take the picture to present in the room, I mean, you watched it happen live, right, Alex? You watched it right in front of you. That's not pre-recorded. That was the live market. So watch this. I talk a lot about process, guys. Thank you. I know my rules, so check it out. 15-minute, not trading directly into a zone. Check. 1 minute was not trading directly into it, had room to manage. Check. Buy or sell a close on the correct side of the small triggers. Check. No opinions, right? No wishes, no hopes, no wants. Quick profits because I could identify something that would create a bounce. Second profits at the top of that zone. And then just, man, it either goes or it doesn't. But for $330, I can do that twice a week. Look at that. Or I can do that twice a day, guys. Never work another day in my life. Alright, what's the large chart read, guys? What do you think? Triggers are still up, right? Still strong side of the triggers. Still room to that zone that didn't get hit. But my small triggers rolled against me, so my only option is a pullback to an area with a close on the correct side of the small triggers. That's what my rules say. Chariot, great entries create manageable trades. And when it's right, and honestly, you could have gotten in with this up bar with the small triggers up. You really could have. I let it get above the HVA line. Could have had even more room. There's your mid band. There's your zone. And this is where I'm almost rooting that it doesn't close above, that it gives me one more bar, that it pushes a little deeper, that those small triggers come down a little lower, so I have even more room to take that trade. Does that make sense? In 16 seconds, we'll know whether or not it closes on the correct side. But if it does, there's nowhere to go. You'll have to make a decision on whether or not you're willing to take that trade. My rules say don't do it. Don't trade directly into a zone. Make sure that you at least have room to make a little money. Didn't close above. I might get my wish. I might get my wish. Push. We put so much stress in whether we win or lose, and I don't think we put enough stress in whether or not our rules are met. Did you guys know that when you stop worrying about the wins, they tend to happen? When you focus on the process that creates the wins more often than not, that's when most traders find success. And the most successful traders that you ever meet do the same thing every time. They don't say, oh, I hope I don't miss out. They say, oh, it has to give me a close on the correct side of the triggers or it's not my money. Has to give me the right look or it's not my money. Can't trade into an area or it's not my money. Can't fight the large chart or it's not my money. 3, 2, 1. There's your close above. My plan says don't trade right into an area. I have to have room to targets. So did you guys know that if the market goes up from here, it's not my money? I have to embrace the idea that there's a reason. There's a reason I do what I do. All right, I'm going to shut down